What is up, folks? Happy Sunday. JT here with another Chart Talk Live Sunday session. Hope everybody's doing well. Hope folks that are watching along on YouTube will enjoy the stream today. Again, sorry for no chat on the YouTube side of things. We really want to focus on our Discord community at X Trades and making sure that those folks who are part of our community there are getting the maximum benefit from these sessions. So I hope you understand. I'm just waiting for some people to roll in here and we will get started. Yeah, there. Good. What's up, Navy? Oh, Navy Plum's in the wrong channel. Just DM'd him. I'm sure he's looking for the members only channel. There he is. What's up, Navy Plum? Hope you're doing well. The first to join this afternoon. Hopefully we'll see some more people roll in here shortly. If not, you're going to get a live one-on-one mentoring session. Good afternoon. Hope you've had a good weekend. Hope all is well. I think I picked the right day and time to do this stream. It's a little bit cloudy, looking for isolated thunderstorms, so I'm going to be stuck inside. Might as well be helping our folks here in the X Trades Discord. What is up, Akan? Hope you're doing well. We're giving folks just a couple more minutes to join in here. Happy Sunday. Good afternoon. If this is your first time joining one of these streams, oh, there you go. You found it. You got it. I was going to make sure you knew where the chat was. Oh, Chris said 3 p.m. Oh, damn. I wonder if that threw people off and they thought it wasn't happening. What's up, Osiris? Good to see you. Happy Sunday afternoon. Yeah, I think the event was 3:30, right? I scheduled it for the right time. I hope. Oh, let me also do this. I don't know why it didn't automatically start, but there we go. Now it says it's started. Yeah, I'll have to, we'll get that squared away. What's up? Yeah, it's just. Hope you're doing well. Happy Sunday, everybody. All right, let's get rolling here. We've got a few people in the mix. We'll let others join as they can. Again, apologies for any confusion. The time for this was definitely 3:30 p.m. So let's start digging into stuff. What questions do you guys have? What tickers do you want to take a look at? This is a very open format. I have no agenda, no topics that I plan on covering. I'm really just opening up myself to you all, so we can, use these couple of hours, on a Sunday to hopefully, make everybody a little bit better in their trading and their executions, all that fun stuff. Yeah. I've got to, I will get you access for that. I'm happy to do it. You want me to give you one by one? One by one is good for now, but if anybody has any other trade related questions, right? It doesn't have to be just ticker analysis. While I absolutely enjoy doing that, and we will do that. I also want to encourage anybody in the mix, if you guys have any questions at all, or hey, this is something that I'm struggling with. What should I be doing differently? Anything along those lines. Perfect. Perfect for what I'm trying to do here with these Sunday sessions. Whereas, with the Crunk just rolled in with the the fat JD Vance head. Oh, that one gets me every time. Welcome, Crunk. Hope you're doing well. Happy you're here. Happy you're able to join. All right, let me get Galaxy teed up. This is one I've not looked at. 3-bar setups, okay. So scanners and criteria do I use? What I've been doing, especially now that TradingView will allow you to set indicator-based alerts on watch lists, is I will use the scanner in TradingView to generate a list of tickers that kind of meet the criteria that I'm looking for. And generally the criteria is pretty open. One of the things I'm looking for is average volume. I think the most recent watch list that I set up, I think we were essentially looking for things that, yo, what's up, Chris? Good afternoon. How are you? Hope you're doing well. If you want to join in the voice chat as well, please feel free to do so. Totally up to you. No pressure. But yeah, as I was saying, scanner wise, for me, it's more about volume and, that's pretty much it, actually. Now, if you want to look for some, no, all good, man. Totally get it. No pressure. Now, if you're looking for some other things that you could use in your scanners, things that I like to use that are generally available are like moving average crossovers, right? So like the 50 over the 200 on the SMA, 9 over the 21 on some of those higher time frames that you're talking about, Akan. So if you're looking at weekly or daily type setups, maybe looking or running some scanners that are looking for the 9 crossing over the 21 EMA. But what I'm generally looking for is tickers that are trading about 10 million in volume on a 30-day average. You really need that kind of liquidity to have, good movement on the options contracts. Generally, you won't find a lot of tickers with very wide. I mean, there will still be, some distance in the bid-ask spreads depending on what name you're looking at, but they don't tend to be as wide if you've got things that are trading over 10 million. Shares on a 30-day average. Other things that I would so what I've personally been doing, and this is something to consider, just be aware of that TradingView is able to do now. So what I'll do is I'll take that scanner, right? And again, I don't want the scanner to limit my potential list of tickers based on, a moving average crossover or anything like that. I'm kind of just looking for a whole, hey, if it trades over 10 million and if it's an ETF or a stock based in the US, here's, that's what I want to see, right? And then I get that, throw that into a watch list, and then I can set watch list alerts on all of those names using NTS is what I've been doing lately. And really, in fact, I've put in, I don't know how much attention will be paid to it, but I have personally put in a request to TradingView to add the ability to run those watch list indicator alerts on the extended hours charts. Right now, it limits it to just regular trading hours, and NTS it doesn't have to be run on extended hours, but I think you do see significantly better performance, and it's what I personally like to do as far as what charts I like to look at. So I'm running the extended hours chart, and I, as soon as TradingView gets that included in those watch list alerts, I think I'm going to find a way to try to share that information or feed it into the chat via some kind of a bot or webhook, something like that. So folks, will have visibility on that sort of stuff. Even if they don't have Neptune. Been trying 3x relative volume on scanners, and it's yeah, that's a good one. As far as, yeah, if you're seeing something that's running like way high over the regular 30-day average volume, that's a good way to look for potential setups and tickers that are going to move for you as well. Again, volume is really what we need for price action to move, for support and resistance to be broken. You have to have enough volume to overwhelm buyers or sellers if you're looking for something to break above resistance or below support. So volume is probably one of the most critical things I would say. Make sure that you are including in your scanners. Otherwise, you wind up finding a bunch of, illiquid names or penny stocks or pump and dump type things that, are just noise, in my personal opinion. So anyway, I hope that answered your question. If you have any other specifics or any other ideas for scanners that you want some input on, I'm very, very happy to share whatever thoughts I have, in that regard. TrendSpider's good. Other sites, I think TradingView's scanners leave a little bit to be desired. If you've got access to Thinkorswim, they have very good scanners. And Finviz is another one, finviz.com. They have free scanners that are pretty flexible as well. Another thing you could look for, is EPS and stuff like that. So we'll get all that stuff squared away. But any other questions or tickers you guys want me to take a look at, feel free to start dropping those in the chat. Let's start working on this Galaxy trade plan, and as I make my way through this, I should be able to still field, there we go, separate those two words, questions, and will do my best to walk and chew gum or chart and respond to your inquiries with some degree of intelligence. All right, so let's get Galaxy. Review last Thursday's SPY plan. If the breaks the stop loss, do you wait till the entry to go the other way, or do you wait for the entry? Reddit? Sure, Mike. We'll take a look at Reddit. Yeah, I think last Thursday we didn't hit any targets. We did have some stop outs. I don't have that locked in, but I can pull it up real quick so we can talk about that. And then we'll move on to the Galaxy trade plan. I think it was just, I think last Thursday was just one of those days where, we didn't hit any targets. It doesn't happen often, but it does happen for sure. What was last Thursday? The 24th. All right, I've got the levels up here in front of me, so let's plug that into, what chart could I do that in? Let's do this, because I don't want to lose the SPY plan from front. Well, here, I'll just pull it. Just go ahead and do what I need to do here. So I do keep a copy of the SPY plans and their performance. Whoops, wrong button. There we go. And this is how I capture it, so I can see what day the plan was for. I can see all my levels. We can obviously see how it performed here in hindsight, but I do like to document, where we started and where we finished the day. And I keep all that in a Word document that is currently up to, let's see. It's trying to open, but I think it's probably the biggest Word file I've ever seen, because it's just hundreds and hundreds of pages of embedded images. So what is this? 658. I've got approximately 658 SPY plans documented in this thing. But I've got Sunday's or Friday's plan. So let's get this set up with Thursday's plan, and let's talk through what we saw there on Sunday. 635.38, 636.72, 637.81, and 638. 638.92. Stop loss average now is 634.64. We were looking for a break below 632.87 for 631.96, 630.99, and 629.76 with a stop loss average at 633.68. So this will give us the SPY plan from Thursday. Let's move that back a little bit so we can talk about it. Let's do this. This is going to have to be like, should see them pop it up. Yeah, there they are. That's good enough. I don't know if I can get this to stretch back that way. Cool. All right, so yeah, I mean, this was really, it was a good break. It was a confirmed break. It just, for whatever reason, we just stalled out shy of pushing all the way up to that first fib extension over 635.38. Again, we are in price discovery at that point. The best thing we have to go off of would be trend-based fib extensions, which is really, not going to be as good as established support and resistance levels that are based on price history and price action. It's a little bit more of, this is our best educated guess at where we might find resistance. It's how we did call the all-time high Friday within, I think, 2 cents of the high of the day in that new all-time high level before we saw a real pullback going into the close. So those were fib extensions, right? That's how we're picking those levels. And it was the same thing here Thursday. It's just, for whatever reason, it was just kind of a volatile, choppy sideways day. We definitely had a confirmed break here, break over back test there on the 5-minute. That looks like a great go signal to me. We continued to test and show support where we expected to see support. And then, we got this pullback. So I would say the one thing I maybe in hindsight, and we'll take another look at this now that you've mentioned it, I feel like maybe I could have adjusted where this stop loss average down was. Again, we're working off minimal price history. I was kind of going based on these big rejections and seeing lots of resistance kind of near that level or attempts to hold it as support, and then below it, it looked like we were making bigger moves to the downside, which would have not been a good setup for our risk reward as we had it, as we had our entry in PT1 figured out. Essentially, I think we would have been upside down on the risk reward there. So, I mean, I could kind of see maybe calling it off some of what we see here with some of this resistance there, very near to the support down here. Clearly, that was the right level. It just, it didn't look like. It looked to me like we should have had our stop a little bit tighter on Thursday. So, I'll own that 100%. It's why, speaking of 100%, even the SPY plan is as effective as it is, does not have 100% success rate. There we go. It's just part of trading. Does that answer your question? Work. Yeah, well, chime in with your keyboard, Osiris. I'm here to help however I can. So wanted to take a look at last Thursday's SPY plan. I think we just covered that, and again, I think it's just one of those days where we didn't get the follow through that we were expecting to get once we got that break over 635.38. Again, the one thing I in hindsight I think was actually correctable. Potentially, or something I could have potentially looked at differently, is just expanding that stop loss average down a little bit. But I had to make a call, right? At some point you have to pick the level and then go for it, right? So at what point would you start going into puts? So at that point, I still stick to the plan. Now, certainly, if you see things developing or moving averages shifting, or like let's say. A confirmed break below this stop loss average down, like let's say this 200 SMA was a little bit higher and it was up here. And if we were breaking down below and back testing that confluence, I wouldn't have been against maybe taking an entry there. But ultimately it's stick to the plans from that point, right? So, if we did get essentially a breakout that didn't complete the move to a price target to the upside, and then we eventually get a confirmed break of things opening up more opportunity to the downside, I absolutely say, switch biases essentially and make up for the loss up here on the downside move that hopefully would play out. Same thing, I've seen plenty of days where we get, kind of weak breaks to the downside. They don't really finish the move to a price target, and then the call side prints all three price targets before the day's over. So, yeah, it's just stick to the plan throughout the day. As the day progresses, right? Like as we start to get to, lunch, so 12 o'clock, 1 p.m. Eastern Standard Time, if you're not, I would recommend, if you're typically trading zero DTE contracts following the SPY plan, I would shift to, at the very least, the following day expiration. Generally speaking, I'm playing, at least a week out on my SPY expirations. Unless I see something where I'm like, oh, this is like a really great setup, I think it'll be a fast mover within the day, I might play something a little bit shorter than that. But generally speaking, I'm buying at least a week at a time when I'm following the SPY plan, and executing that way. But yeah, that's the only other thing I would say. Stick to the plan, but make sure that you're extending those expirations once we start to get to the middle and second half of the day. How does one read the SPY price and buy options? Two screens, like if you hit the call. So me personally, I don't trade on my screens. I actually execute all of my trades on my phone. Now, obviously, I have multiple screens. I have, essentially it's really only two if I've got my laptop open as well. But when I say it's only two, my one screen is a 49-inch ultra wide, which I can split up into, 2 or 3 windows that essentially does the same thing as having 2 or 3 monitors. It's just one big seamless screen. So, I mean, the actual number of screens is, 2, right, with when I'm working with my laptop as well. But really, that one screen, that ultra wide, is basically 2 to 3 screens, depending on how you lay it out. So that's how I personally do it. So if I see a setup happening, or potentially getting ready to take shape, I've gone ahead, I've gotten into my brokerage, I've pulled up the options chain for SPY, I've selected the expiration and the strikes I know I want to play, and then I'm just kind of sitting there waiting to enter. I'm typically buying at the ask. I don't want to sit there and fart around with a few dollars, here or there. SPY chains being very illiquid and the bid ask being very tight, you're not, gonna give up a lot of money on the entry if you're buying at the ask. So so I'm watching my screens, and then I'm just kind of sitting there with my phone in hand, ready to actually execute the orders, whether it be to get in or get out. So that's how I personally do it. I don't know about anybody else, but I don't have my I very rarely log into my brokerages on my computer at all, unless I'm, making a big fund transfer or just restructuring some stuff. But generally speaking, day-to-day trading, I'm hardly ever getting into my brokerage on my computer. Yeah, absolutely. So if I see a good setup on a Thursday or Friday, I'm definitely going into the following week. If it's Thursday, Friday, I'm probably buying next Friday's expiration. If it's, Monday, Tuesday, I'll probably go with that Friday's expiration, with the intent of, knowing that I'm not going to swing any contracts, right? So even if it doesn't play out or we just go sideways or whatever, I'm not rolling the dice swinging short expiration SPY contracts, especially, with the current administration in place, and the tariff thing is, here one day, gone the next. Anything can pop up at any moment. Rumors of Jay Powell resigning, with a bogus letter. I mean, there's all kinds of dumb shit that can happen overnight. That if your expiration is too soon and you try to swing something overnight, you're just, you have a high probability of potentially getting cooked and taking a much bigger loss, than your plan would have allowed for. So, anything less than 30 days, I'm not swinging it. So, so that's my take on that. Hopefully that answered your questions. All right, I did say I was going to get to work on this Galaxy plan as I answered some of these questions. So let me start working on that. CMG, Baba, Reddit. Okay, we've got a few tickers to work on. I think I got that question for Navy Plum. I think I answered yours. It's just D. I was working on relative intraday supply and demand levels for any given ticker. Most effective way to establish them, I use hourly candles with high price, low price as the baselines. How far off am I? So, I don't think you're far off. I think what you're talking about a little bit more than supply demand, or at least the way that the language I like to use around things, just to make it very clear what I'm talking about, is that's a little bit more just, I think, support and resistance, what you're looking at. And I definitely see why you would have some of those levels where you have them. That being said, supply and demand I look at as something a little bit different. So let's see if we can find some maybe real quick examples here on Galaxy. So we had some sideways price action, a little bit of a pullback before we got this impulsive move to the upside. Let's take a look at it. And for me personally, I like to look at the daily and the 4-hour charts, maybe even the weekly chart if it's a ETF, to find supply and demand zones. Let's take a look at this on the daily. And so what you're generally looking for is something that is kind of your trigger candle that opens up the move to the upside. Sometimes you can find them pretty easily, like if you have something with some pretty long wicks going this way or in that way. You can look at it, potentially, or if you have something that's a real clear doji candle like this right here, that would be something where you trace both the top of that candle and the bottom of that candle. If you're looking for something that is breaking to the upside, generally you would go from the candle open to the candle low. And a lot of times you can also kind of see where these, the price action will kind of help you find the right levels for this, right? So we're kind of in this downward trend right here. This candle and this candle that follow it are kind of the ones that really started to push things back up toward this new all-time high that we're looking at. I'm assuming that's a new all-time high. No, I take that back. This high of last week there on Galaxy. Again, I've never looked at this. I thought it was a newer name than that. They've been around for, a lot longer than I thought. What is Galaxy Digital? They're a bank? I expected this to be a space company. Okay. Digital assets, data centers. Okay. Nothing to do with space travel or satellites or anything like that, which is what I thought, at least based on the name. But going back to supply and demand, again, I kind of am looking at this candle right here, and it's probably a candle open. Candle open to the candle low would be down there. But you can see, and so this is one where I probably maybe even trace the high of this candle off of this, and it's a little bit subjective, I guess is probably the right word, for how I personally do supply and demand levels when I'm doing them. But if we look at kind of how this would stack up right here, you can see pretty clearly if we go back in time, right? And let's put some, I think there's a way to, let's put some borders on this. Let's do orange, that's good. So you can see how we have a pretty good support and resistance level at the top of this. Got a pretty good support and resistance level down at the bottom of this. We do have some sweeps below, but nothing actually breaking below here on the daily chart. You can also see where that was resistance, and then it broke over, became support. So you kind of have two really good support and resistance levels that span this single candle before we get the move to the upside. And so that's what I really start to look at now. For me, it would be a little bit, I would set this up a little bit differently. It would actually look like this. What am I doing? 1 day supply. Oh no, that would be a demand zone. So it would look like that. So it's kind of from this point forward, we're looking for confluences and good opportunities to perhaps buy in that demand zone. You can also catch them as trends kind of continue to the upside, although I don't see any new ones that really stick out to me moving up here. There could be some prior supply and demand zones from way back here. But that you just highlighted, where's the lowest price point. So the lowest price point on this, if that's what you're talking about, takes it down to about 1940. Sorry, let me just catch up on some of these questions. Okay, cool. All right, so let's get focused though. Let's get on some of these trade plans. I know that that's what a lot of folks come to these for. All right, so for me, generally I like to start zoomed out. I don't like to have a lot going on my charts when I start to find the levels that I'm going to want to use. One question that I get a lot when I'm doing supply and demand, or God, got me still talking about supply and demand. When I'm doing support and resistance levels, one question I get often is how far back should I go? And I think this Galaxy ticker is actually going to be a pretty good example of how it's not really a how far back should you go. It's a, what is the reasonable range that you want to see? Oh, no, not your bad, man. I just, sometimes my brain's still on one track before it's fully switched over to the other. That's not on you. That's on me just slow switching gears. So I would start to look for, okay, where's kind of like a reasonable bottom for the foreseeable future and where's a reasonable top for the foreseeable future? Pretty clearly, we got a big bounce off of this 837 level. It was prior support back here. The one thing that it's kind of missing a little bit that I'd like to see, there's a little bit of a resistance test. Back here on this one candle, but not really a big rejection or a lot of follow through. This candle likely, or not likely, started the week here and most likely made a push up into this level and then rejected. So, it was a rejection from 830 down to 631 within that week. So it's not the biggest rejection in the world, but not bad, especially for something that's trading sub $10 at that point. So I think we've got a pretty clear bottom that we'd want to look at. And then honestly, we're getting pretty close to this, what looks like a real rejection here. It's not kind of just a wick that sweeps a bunch of liquidity and ultimately moves to the downside. We had kind of a couple of candles that had to test up in this range before it rejected. And we clearly do have a key resistance level up there. And so you might even want to, or what I like to do, and you may also want to do, is I'd mark kind of the bottom of my range and the top of my range with kind of a couple of different colors that I'm not using for my typical support and resistance levels. But once I've established this range, right, as long as there's candles within that range, I'm going to use them, right? So we could be going back as far as 2021, and if we're talking about, a ticker like AT&T or something like that, where it's not a big volatility mover. It kind of just grinds and stays in a range and moves more left to right than it does up or down. You could wind up going back to the early, 2000s, maybe even the late 90s on some price levels or some candles that you'd be looking at to establish your support resistance levels on a name like that. So again, for me, it's not about how far back should I go. It's how far up or down should I go? And then as long as you have candles within that range, use all the candles that you have, because that's just price data that you should use to your advantage. So, quick talking point on that. So let's continue finding our support and resistance levels here on this weekly chart. We will work off of some back here, I have no doubt. Like that looks like a pretty good one. And again, all that I'm really looking for is, at least initially, what I would say you should look for is probably a better way for me to say this, is just looking for really clean touches on both sides of a level. You want to see, the support and resistance levels, if that's what you're drawing. One of the key things that you have to look for is right there in the name. You want to see it act as both support and resistance, not just one or the other. And generally speaking, I have some criteria for, how many touches do I want to see on a time frame, and what kind of reaction do I want to see on certain time frames before I'll say, yeah, that looks like it's a good level on that particular time frame. Another thing that I'm doing, or you'll see that I'll do, and it's what I do every time I work on a new chart like this, is I will color code my support and resistance levels as I'm drawing them, so I know exactly what time frame I drew them on. Obviously, I'm not going to be waiting for confirmation watching the weekly chart. I'm generally looking at like the 5, the 15, and the hourly charts, with some exceptions to that, but by and large, that's what I'm looking at. So I want to be able to look at those smaller time frame charts and tell exactly, how significant or how strong might this level be. And, for me, if I've drawn it, if you can see it on these higher time frames like the weekly and the daily chart, those levels are going to be a lot stronger. They're going to be a lot tougher to break than levels that you'll see on the hourly chart, for example. So a little trick for doing kind of technical analysis, I guess, or a little tip there. And God, there was something else I was going to say about that I was just thinking of. What it does is it allows you to be able to look at the chart and just kind of at a glance know exactly what's going on without having to do a bunch of thinking about it. That is very key, right? You got to be able to make those decisions quickly when it comes to trading. If you wait too long, you could wind up chasing, but again, you also have to wait long enough to make sure you've got good confirmation and that you're not, trying to anticipate a move that's not ready to happen yet. That's probably one of the more difficult parts of anybody's trading journey, is kind of figuring out, that sort of trying to hit that Goldilocks of not over anticipating the move, but also not getting paralysis by analysis and waiting too long, and then you get FOMO and then you try to chase and it just winds up being also a not good scenario, right? I don't think this is a weekly level, but it's one I'm going to want to look at on smaller time frames. Not seeing a lot else that really sticks out to me here on this weekly chart. Nothing that's really clear. So let's go ahead and get to the daily levels. And again, quick kind of trading view tricks, if you will. Trading view, the default daily chart, the 1-day chart is just the regular trading hours, 1-day candlesticks. So I personally use a custom time frame, add custom interval here in trading view, create a 24-hour time frame. And I use that to look at daily candles that include the extended trading hour session, which is, again, just my personal approach. I know there are definitely two different schools of thought on that, and you can certainly be successful with either approach, right? Whether you're a strictly regular trading hours or you want to use extended hours as often as possible, like me, that difference in approach is not going to, I don't think, make a huge difference in, your overall success rate and capabilities as a trader. Again, this is very much an art, not science. Although it is heavily data driven and we should approach it as scientifically as we possibly can, there's not, there's more than one way to skin a cat, as they say. All right, so let's get these levels dialed in here, though. Not a lot of time being spent establishing support and resistance levels in some of these ranges, but that's okay. It's not the end of the world. We can work with it. That is an interesting level there. Whoops, didn't mean to move that. I think there is something here, but it's not, at least I don't think it's a daily level. Let's take a look at this more recent price action. Maybe, actually. Needs a little adjustment. This could be a good daily level. Let's mark this with a color that, just a placeholder. I want to see how this played out through this historical price action. Like I said, it's not about how far back you go, it's about how far up and down. And if you've got candles in that range, use them to your advantage. I am seeing some decent signs of support and resistance going back there. that helps further establish what we're seeing here with things like this break below, back test, one big candle shooting all the way down to 1778, and then we get a candle to break above, nice back test, makes a big move to the upside. So that looks like a really good level, actually. So we can call that a good daily level. Now, how many of these will we need for our trade plan? That's to be determined, but I like to be thorough as I map out all these levels. If I'm going to take the time to do the chart, I want to kind of be ready to use the levels that I come up with for the foreseeable future. So while it is maybe a little bit more of a time investment up front, from that time investment, you'll be able to extrapolate, dozens, if not hundreds of trade plans, depending on what the name is and how it moves. All right, I think that's pretty good. So let's take a look at this 4-hour chart. 4-hour is one of my favorite charts for finding support and resistance and kind of a lot of things that I like to look for from a technical analysis standpoint. I do like this level right here as a potential 4-hour level. Same thing with that one. I am going to dial this in a little bit so we can get through as many of these tickers as we can. So I'm going to start focusing more on levels that I think will be needed for a trade plan and maybe not so much on being as complete and thorough as possible. This looks interesting, but definitely not confirmed. Just so I don't lose sight of it, let's go back to when we previously tested this range. Let's see if we can get some more confirmation. Yeah, there you go. Nice rejection, part of a gap to the downside. Gap levels, another quick tip for technical analysis. Gap levels a lot of times will establish new support and resistance levels or will happen at existing support and resistance levels. So I'm kind of looking at here we have this same level involved in two different gaps, actually. This upper pink line. So this one, I feel good about being a 4-hour level. This one, top of the gap here, bottom of the gap back here. So same level we're seeing twice involved in two different gaps there. Haven't really used it much here lately. So this is one, I'm going to kind of leave it as a let's wait and see as we go through some more time frames here. Is there anything that's really clearly established support and resistance level between 32.54 and 35.14? That's kind of my next big question. Seems like a very broad range. We are seeing some resistance right here around 34, probably a psychological level. Lots of resistance, no support. So in those scenarios, again, I'm just going to mark it with a placeholder so I can keep an eye on it as we go through some more time frames here. And yeah, let's go ahead and move this to the hourly chart. I want to see if I can't lock in these two placeholders, these blue levels up here. Yeah, that's still not really showing much. I like the levels around it better. I'm going to get rid of that one. That will happen sometimes. And then let's take a look at this 34 level. I want to see if we can get some something on it. Just lots and lots of resistance. I'm going to keep this on watch. There's a ton of resistance on it. We just haven't spent enough time over 34, I think, to really see any support testing. So I'm going to leave it on the chart for now. I think it will be important to a potential trade plan forthcoming. So let's start to also look for any trends that are sticking out. I think we do have one right here that we've broken. So it's good to know that we've kind of confirmed a break of that trend right there. We also have, so it's not important, but shows us that this one is trying to build some momentum here. And then that's obviously a very clean and confirmed trend. 1, 2, 3 touches. That's all you need to confirm it. They are all pretty spot on in their response to testing that trend line. For those of you who are using TradingView, here's another quick tip. Generally speaking, I don't want to lock on to any point on these candles. I want to be able to kind of draw more freeform, but when you're doing trend lines, you do really want to try to hit those as dead on as you possibly can. So if you hold down the control key as you're drawing a line, you'll notice that this magnet turns on when I hold down control, turns off when I let it go. So if I want it to magnetize, to stick to the candles, you can see how it will snap to them as long as I'm holding down that control key. Could also be actually just, I didn't mean to do this. Could actually be, and we'll know better, a pretty clean channel. But a good way, if you've got a confirmed trend below to determine if you do have a good channel that's clean, you can clone that level. So it's, essentially exactly the same direction and all that sort of stuff. And sure enough, if we take that and drop it right on top of those two candles, we do have a pretty clear channel pushing us right to the upside there. So, all right, hourly chart. Anything else that I'm seeing that makes me want to add some levels? This is a little bit interesting, not the most interesting level I've ever seen, but we'll drop this on the chart. We'll see if it becomes relevant as we go through our planning. All right, and then last but not least, I do like to throw my indicators on to get a feel for where those are sitting on these time frames, and I can use those as potential confluences for where what levels I want to pick and how I want to watch for things. So, overall, we're looking pretty bullish on NTS across the board. We can take a quick look at the 4-hour. Yeah, still super bullish, especially as long as we're holding the bottom trend line there, so we can kind of continue to use that to our advantage, knowing that we have a confluence between this bullish momentum and this lower trend line of this channel that's pushing us to the upside. So I think that will allow us to find confluence and probably a downside entry if there's going to be one right here at 2902. That would confirm a break below this bullish momentum. That would also confirm a break below this trend line and would confirm a break below a pretty significant level in this weekly level here at 29, which also might be a psychological level. So yeah, lots of stuff saying that 2902 below that we open up downside. And then I also start to look at this candle right here. Actually, this area of candles, it could be, we do have some pretty good support and resistance. We did have a little bit of a sweep there. So I would say already I'm looking at 2741 as a first downside price target as I'm starting to kind of feel out what we're seeing here on this chart. The other thing, well, no, actually, we already confirmed that on the hourly. Let me just make sure. I'm going to double check this one more time, make sure I've got that lined up really how I want it. Yeah, that looks, we had 1, 2, 3 tests, then it kind of slid out from under it there in the extended hour session, trying to push higher. So I think that's a non-factor at this point as far as the trade plan goes. So now my big question for myself is, we've got this pre-market rejection right near this 3159 level, clearly rejected it back here last Monday as well. We could potentially make a move over that 3159 up to 3319 is what I'm kind of looking at, but I don't want to just pick one recent rejection as a means for establishing a price target. So let's rewind. Let's go in our time machine and scroll. Come on. Get me some candles here. There we go. They're starting to come back up into our range. Let's see. Do we have anything else on that level? Could be just a tad higher. We'd be barely catching some support and a little bit of resistance there. It's 33.27, so not a big difference. what was the high of this candle? 33.17. Let's nudge it down. Again, we're really splitting hairs, but I try to be as accurate as possible when we're putting these plans together. So now we're looking at a potential window of opportunity to the upside over 31.59 up to 33.16. Oops, that should be 3 pixels. And it also looks to me like we can share a stop loss on either side of these plans right here at 30.24. So let's go ahead and lock that in. So one thing that you'll notice, right, as I've gone through this is, I've mapped out all these levels. The only real difference as I've drawn them is what color I'm making them based on what time frame I'm charting. Now that I'm selecting levels from my existing support and resistance levels, you'll see, or hopefully you've noticed, that I'm changing some other properties of those levels so they stick out from the other support and resistance levels on the chart. So for my entry levels, for example, I go with 3 pixel solid lines. For my stop loss levels, I go 4 pixel dotted lines. And for my price targets, I do 2 pixel dashed lines. It's just what works for me, but come up with a system of your own that works well for you. That is certainly important. Let's start to stretch this out so we can really see the price action and what these candles are doing. Can also use this to make very slight adjustments to some of these levels. Like that actually does look better. It's just a little teeny tiny bit lower from where we had it. Could also potentially find a 200 SMA confluence coming up right here at 26.68 if this continues to move up, depending on the timing of these moves. We could see that confluence. So, kind of imagine this sort of continuing on a similar trend, right? At some point, there will be a confluence down there with that weekly level in 26.68. Even though it seems kind of tight for price targets, I think this is a good PT1 and 2 setup based on that. Third target, though, I think we open up some more room to the downside. You can clearly see we had some resistance here. That's flipped to support. We also, when we draw these weekly levels, that green level that's just below where I'm eyeballing it right now, we're very zoomed out when we're drawing that. We also are not using any extended hours data in there, which, again, I kind of prefer to use. So I'm okay with making small adjustments to these levels, especially if it starts to really catch some nice support and resistance. We're talking about a 27-cent shift on this if we move it up right there. And that does kind of give us better range movements. So ultimately what I'm looking at is if we do ever break below 26.68, 25.31 would definitely be a smart place to finish taking profits to the downside. Upside, and we're going to get a chance to talk about some trend-based fib extensions, I think. Let's take a look. Or do we just use that 34, not totally confirmed level, but lots of resistance there, also a psych level. And then use this current all-time high, which is actually just a tiny bit lower. Not current all-time high, but the top of our range, right? Was there a higher high than that, actually? I'm curious. Not a real one, I don't think, right? Yeah, I don't think so. Oh, no, there was one spike there that I just saw. Come on, where'd it go? All right, let's zoom out and find this sucker. Sorry. Here we go. So when did this take place? 4/14 of 2021. Let's see if we can go back that far on the hourly chart. We can. Yeah, there's not much there, though. I think I do like that existing level that we had at 35.11. I did have better resistance on it. It was a little bit more clear. Didn't look like a liquidity sweep or anything overhead. Did you have a mentor that taught you a lot? Just me, man. And some of this stuff were just ideas that I came up with on my own. Watching YouTube videos, learning from other people in X trades. Yeah, it's kind of hard to tell you when exactly I kind of landed on some of the things that I use every day now. It's just kind of been a slow development of kind of how I try to systematize my trading. So, sometimes it's hard to point to that one like, this was the thing that did it for me. But now I really wish that I had a mentor, especially when I first started trading options. I probably would have not blown my account the first 1 or 2 times I did, however many years ago that was. Probably, I don't know, probably getting close to 10 years ago now. All right, so we've got our trade plans locked in. I do like those as our price targets overhead. One thing, or we talked about doing some trend-based fib extensions. I think it would be good to have some in place. So to do that, just so we kind of can keep an eye on things if we do break over 35.11, I want to find that really key rejection. This right here is what I want to focus on to draw an extension off of this. And so when I'm drawing these trend-based fib extensions, essentially what I'm looking for is, when did we start making higher lows and higher highs? That's kind of your origin point. And how long did that trend kind of stay intact that led us to the upside? So you could look at, right, starting down here, it's pretty much been higher lows the whole way up from this point. However, I don't think we have a good trend that we could use off that origin point down there. Let's see. We'll just check. We do, it broke a while ago, would be my guess. Also, this is looking like this was not really volume-based trading. So it's a little iffy, but to me, the better origin point really does look to be right here. We're clearly holding that pretty cleanly the whole way up to that run. So based on that, do you feel like price action itself is more indicative of where pricing will go, or do you feel using indicators which are usually based off how the market has already occurred? Well, if we're talking about, how do I say that? How do I answer that question? That's a good question. I mean, I price action first, right? In my kind of like hierarchy of what matters the most to me. Price action is always going to be first and foremost for me. Price action and support and resistance, which, support and resistance is ultimately based off of the price action. Indicators come second, but that's where we find our confluences. And we could even maybe find an example of that if we throw some pivots on here. So we'll take a look at that in a second as well. But what you all have seen so far, and I should probably take a moment and talk about this. What you're seeing me do right here, right now, is what I do every time I do a trade plan. Every time I pull up a new chart, I go through these same steps every single time, and I do them the same way pretty much every single time. Maybe with some small deviations here and there, but nothing, no dramatic departures from what you're seeing me do right now. So the point that I want to make in mentioning that is, once you start to lock into something that works well for you, or you start to see better performance in your trading, your accounts moving in the right direction, all that sort of stuff, doesn't mean that there aren't still things that you could do to improve your win rate. Maybe, find ways or things that the chart will show you to perhaps hold a little bit longer, or whatever the case might be. Again, it's a never-ending, lifelong journey and learning process. But once you kind of really lock into the core principles of what works well for you as far as a trading system and strategy goes, make very small adjustments to it from that point forward. You don't throw entirely new concepts out there, or start to lump them in. maybe, you know, if you have an indicator that you're interested in saying, you know, hey, this could maybe help me be a little bit better, maybe watch it, test it for a little while, make sure it does prove to be true, and then start to add it to what you're actually doing and executing with your trades, before you know, go and say, okay, that now that's incorporated. And then once it is, make sure it's totally incorporated, totally comfortable. It's, you know, it's part of your second nature of your approach to trading, before you go looking to add the next thing, right? Because if you try to add like 2 or 3 things to a working strategy all at once, and the strategy starts to not work as well, or you find yourself doing a lot of paralysis by analysis, and your trading execution starts to suffer, that's when you know, it's going to be very hard to tell of those 2 or 3 things that you threw in the mix all at once, which is the one that's throwing you off, right? Or what's disrupted the system that was already working well for you. So that's just some quick, you know, experience talking, I guess, for lack of a better way of saying it. All right, so we're going back to our trend-based fib extensions. I know I'm kind of maybe bouncing all over the place, but I think all useful information. If you disagree, just tell me to shut up. All right, trend-based fib extension. So let's start off our origin point here. Let's go to our peak right here. Generally speaking, what I anticipate is seeing that 0.236 fib extension probably going to line up nicely with our current all-time, or our current kind of resistance that we're using to base these trend-based fib extensions off of. It does give us a 0 fib down here, and I can see some resistance there on it. Does make me wonder. Let's see. Let's go ahead and drop this in. So for fib extensions, or any kind of fib levels that I'm doing, just so I know that what they are and I don't get them mixed up with my existing support and resistance levels, I'll mark them in a different color. Everything else stays the same. So now we have our extension levels going up here. One thing I would be curious to know is if we go back to that one liquidity sweep overhead, that was a little bit higher than that top that we're looking at right now to do these fib extensions. Did that hit? I'm kind of wondering if that hit that 0.382 or one of our fib extensions. It's kind of near them, but nothing really too clean or anything, so no help there. That's okay. But that's how I would lay out those fib extensions. So let's get this plan locked in, and let's talk about one more thing. I mentioned this, I think, in the chats the other day, about kind of scaling your starting position size based on sort of your windows of opportunity from your trade plan. So let's lock this in real quick so we can see our risk-reward ratios. Break over 31.59, 33.16, 34, and 35.11. Stop loss average down at 30.24 to the downside. Break below 29.02 for 27.41, decimal 68. And 25.31 shared stop loss average down there at 30.24. So we'll lock this in. And let's throw this on the chart so we can see our risk reward up here, getting to PT1, PT2, and PT3. So let's just get the noise off the chart for a second. So anything not specific to our trade plan, essentially, is what I'm talking about. Move this stuff out of the way. This is another great tool in TradingView using this object tree. You can take all of your support and resistance levels, group them together. It'll only let you select so many at once to establish the group. So that's why I just grabbed a handful, and then I'll move the rest up into that group. So now all of my, where did it go? Support and resistance is in one big group. So if I want to modify all these at once, or if I want to hide them and not hide my trend lines and all the other drawings on my chart, I can do that very easily by just hiding that whole folder. And now you can see, We just got the trade plan pilot, but we still have our channel that we're watching, all that good stuff. So let's make some adjustments to this so it looks right. Y offset's too big for a ticker that trades in this low dollar range. That's probably as good as we're going to get it. Again, I know that we have tight PT1 and 2 really on both sides of this plan, but that's just where the levels were. That looked like the key ones to me, at least. So, going back to my point that I was getting ready to make about sort of how you scale into your trades. What I like to do is kind of a barometer for determining how large I want to go with my initial position size getting into a trade is always, at least for me, how I approach it, is always based off of, okay, what is my area of reward? So between our call entry there in PT1 versus my area of risk, because sometimes PT1 is all you get, right? So that's where I really like to gauge, okay, what is my starting window of opportunity? How big is that versus how much of a drawdown am I willing to take on this trade? As you can see up here, it's already calculated for you if you're using the trade plan navigator. I know mine says pilot. That's just because I have a couple of extra things that I need for the bot alerts that nobody else would need. So all that stuff's kind of stripped out of it. So, but trade plan navigator is essentially the exact same thing. So if I'm looking at a 1.16, it's just barely better than a 1-to-1 risk reward ratio. Generally speaking, for me to start to nudge up closer to like full starting position sizes, like my max, what is the max I'm willing to start a trade off with based on my account size, and all that sort of stuff. I'm generally looking for like a 1.5 or better, just getting to PT1. And then I start to get interested at going, kind of moderate to full position sizing. Anything below that, I start to gravitate towards starting off smaller and potentially scaling, averaging up depending on what the next window of opportunity looks like. Now, in this particular case, the next window of opportunity from 33.16 to 34 is not that big. So this is one where I probably would never average up. I'm just scaling out as we hit price targets and moving up my stops. And I would start with a smaller position size. And, the example that I used in the chat the other day, which, again, I hate to compare trading and gambling to each other because trading should never be looked at, or you should never have a gambler mentality getting into trading. I mean, never is a strong word, but you should avoid it unless you know that you're putting in, small money on a lotto that you don't care if it goes to zero. Okay, take those shots every once in a while if you see a setup that might play out and give you some great returns. And if it does give you great returns, don't then use that as a reason to then oversize your next lotto because you're like, well, the last one hit and it was a 300% gainer. If I'd only put more money into that, well, it was high risk. You were smart not to put a lot of money into it, and don't let that one-time success influence a high-risk setup, throwing too much money into it on the next one, right? So, but if if you know anything about blackjack, and you'll never get to the point, nobody's Rain Man or anything like that. We're not counting cards to the point where we know exactly what's likely to come up next, especially with multiple decks and all that sort of stuff. But if you see a long streak of a bunch of low cards coming out across the table on a blackjack table, you should probably start scaling up your bets, because the chances of you getting 20 or 21 and getting some good cards and not having to worry about taking hits to beat the dealer continues to kind of slowly creep up, right? If you see, start to bet bigger as your odds of that blackjack start to go a little bit higher. And then, vice versa, if you see a lot of aces and 10 cards, start to come out, 10 cards being, obviously 10 through king, you're probably going to start to pull back closer to like the table minimums, because, the chances of winding up with a bunch of you can still win hands. Absolutely. I'm not saying walk away from the table, especially if you're on a heater, but, but the point being is that you can, make more informed decisions if you pay attention to that kind of stuff. And it's the same thing with your starting risk reward on these trades. I would scale up and scale down my initial position size based on my starting risk rewards here. So I think that was a lot of talking about trade strategy and philosophy, but we got a trade plan out of it eventually as I kind of talked through all that. So let's get this locked in here for everybody. This is our Galaxy live stream plan. Let's get to work on the next one once I get this posted. I'm also going to send this out to the YouTube chat. I know you folks don't have the ability to chat back, but I do want to share this so you can pull a copy of it. Oh, even I can't chat if the chat's disabled. Well, damn. Well, you can see it. You can see the URL there. Copy it down, type that in manually to your browser. It'll take you to the right place. Let me also get this posted over in the... I thought at least I would be able to send out chat messages, but I guess not when you turn off that live chat. No big deal. We'll also get this posted in the Elite chat, and then let's get this set up on the bot. So I got my Discord link in. We don't want this firing off at all hours of the day, so I am going to switch to the regular trading hours chart just for purposes of setting the alerts. Trade plan pilot, any alert function call. We only want it going off once an hour. Let's give it until next Sunday the 3rd. For this, actually, why Sunday? Market stops on Friday. So we're going to give it this coming week to play out till close of market on Friday. See if we get some entries and some price targets hitting here on Galaxy. So those alerts are now in place. Let me also lock this in so we can circle back to it as needed. So just to recap, what are we looking for here on Galaxy? We're looking for a break over 31.59 to go long. It should give targets at 33.16, 34 flat, and 35.11 with a stop loss average down at 30.24. To the downside, we're waiting for a break of 29.02 support. That should open up opportunities down to 27.41, 26.68, and 25.31 with a stop loss average down. Share with the upside trade plan there at 30.24. Those are, I should say, your Galaxy live stream plans. All right, what was the next one we had? Let me scroll up here. I should have just, let me actually pull these up so I don't have to keep going back and fishing for these. We talked about the SPY plan. Good afternoon. We did Galaxy. There was another one shortly. I read it from Mike. Mike. Hope you're doing well, buddy. And Baba and CMG should be able to do all of those in the next 45 minutes that we have left. So let's get those charts set up. Reddit. And if you have questions as I'm going through these other trade plans, if you're thinking of other stuff that you like to ask, don't hesitate to ask. Like I said, I will do my best to chart and chat at the same time. So Reddit, ABBA, CMG. Let's get these lined up and ready to go. All right, so let's get to Reddit. I know we've got some levels on this. Actually, looks like it's playing through a recent trade plan we did for it. Let's get these back to their baseline though. Again, using that group, tremendously helpful for doing that. Interesting rejection here. Let's zoom out a little bit. I don't know if the last time we did Reddit, if I charted it all that thoroughly. This is, given the limited amount of price action we have up in this range, this is actually a really interesting level up there at 188.15. That recent rejection, at least on the weekly, isn't really anything. So let's take a look here on this daily chart. Maybe we can start to get an idea. Yeah, I think there is a daily level there, actually, just a little bit lower than our 168 level. I think that will be a factor. 151.71. We've seen some sweeps over that. No real confirmed breaks, though. At least not on the daily. Don't think this is a daily level, but I do think it's going to be a level we're going to want to watch as we go through some of these time frames. I think it's going to wind up being our call entry, maybe. And this is where things become a little bit, you kind of have to pick your spots and take your shots, I guess, is maybe a new slogan I'll start using from this day forward. But kind of looking at this window of opportunity from 154.04 up to this recent rejection up at 164.57. Price action back here tends to agree with it. Everything's kind of getting bought up toward that level anytime it dips near that. Prior to, though, we did have these couple of rejections here, and those do look like a really clean support at 157.90. But then my question becomes, okay, well, if we do that, we've got a stop loss or a first target up there at 164.57. Do we really have a good risk reward setup? Let's take a look at this. Again, we have to let the chart tell us where these levels need to be and then see where the risk reward shakes out. Do not pick levels based purely on trying to establish a risk reward that you want to see on the trade. That's kind of getting your bias into the mix a little too much, I guess, for lack of a better way of saying it. We do have this daily level here at 151.71. We also have this a lot of resistance there at 154.04. Clean support there, and then we can see below 154.04 it really struggles, right? We see lots of sweeps or lots of rejections just below or near that level where we wind up in kind of a choppy range, right? So when you see that, and this is kind of how we need to think about these plans as we're setting them up. So another little teachable moment here. When we see stuff like that happen, we need to think about it like this, right? We get over 157.90, we think there's good room up to 164.57. However, if we've gotten over 157.90 and we've got a confirmed break over that, if for some reason the price action fails to make its way to PT1 before we get a pullback toward the stop loss average down level, what do things look like below your stop loss average down? And that'll tell you if you're picking the right level or not. I see lots of resistance, but I also see I could really make a case for it being either 154.04 or 151.71. Again, we can see some bounces and rejections, very clean off that level. When in doubt, give the plan room to work, is my opinion on that. So, I'd rather have not as good of a risk reward and not get artificially stopped out of a trade, kind of like what we saw with the SPY plan last Thursday, versus, having the best risk reward possible or the tightest risk reward possible. I can tell that we've got a little bit better than 1-to-1 risk reward. It's not massively better, and it certainly would be better if we did run that stop loss tighter. But again, I don't want to do that and get artificially stopped out of a trade just to achieve better risk reward, right? Hi, Genevieve? Thomas, okay. Okay to you too. So let's take a quick look at this. We can always measure it off. So if you're not using the trade plan pilot, or if you just want to, before you map everything out, get a sense of what the risk reward on your trades look like, these long and short position tools in TradingView are very useful for that. So we can drop this right there on our entry level. We'll pull this down to our PT1 right about there. Pull this up to our stop loss right about there. So like I said, it's a little bit better than 1-to-1. Not fantastic, but it's better than 1-to-1. So we are giving ourselves an edge. If we're a 50% trader, you're still shaking out for profits at the end of it all. If you're trading better than 1-to-1. There is a very, very interesting level right here that I honestly think is a good PT2. And this, so remember what we talked about with Galaxy a moment ago, the distance between, why do I have hymns on the chart? The distance, right, between PT1 and PT2 is not really like a significantly bigger window of opportunity, or not really a good size move. So this is one where, again, I probably wouldn't average up on the trade. Reddit is the opposite of that, right? We actually have a really nice window of opportunity that I think opens up over 164.57 that takes it all the way up to 173.85. And in the process of doing that, right, so if we get to PT1 and we're starting to break over and pull back, we could average up on this trade. And if we did that and move our stops up, which is what we always do when we hit these price targets, you could then look at it like this and say, okay, well, if I set up almost as if it was a new trade, but you kind of have an advantageous start on it at that point, what's my risk reward looking like? It's a lot closer to that 1.5 target, right? 1.5 or above, 1.4, pretty good. So this is one where I would make the argument that if we did get a good confirmed break or confirmed break and even better back test off of PT1, I would actually add some to this existing position. Again, you'll still have a good cushion of profit to work with at that point. And you're, the trade starts to set up a little bit better. It's a little bit more conducive to adding some more money in at that point, in my opinion. So a lot of really good traders average up on their trades. So that is always something to consider. So now I'm trying to find this third price target. Let's go down to the hourly real quick. I want to see, because there was a pretty sharp fair value gap candle. Where are we at? Here we go. Right here. Yeah, we got this breakdown, back test up against that 180.75. Lots of resistance at or near there. So again, PT3 or PT2 to PT3 winds up being a smaller move than PT1 to PT2, but again, that's just how it is. That's what the price action is showing me. So that's what we're going to go with. Clearly, right now, we have a strong confluence down here, or had one, but it's still not too far off with NTS down there at 138.44. Lots of bounces off that range, especially once that bull flag was in place. So good confluence there. The question becomes, let's start looking at it like this. That being a potential downside entry. Where is the window of opportunity? We do have this dip down here to 133.33. We have an existing level down there at 132.78. That looks like an hourly level to me. Let's see real quick. I want to take a look at this. If we did make a small adjustment to that level. Yeah, then it would be catching these tops pretty cleanly. Let's do it. Let's make that small adjustment. Takes it right about to there. 133.33. Sounds like my favorite SMA. Catches that bounce nicely. Let's go for it. That'd be a good PT1. Now the question becomes, what would be a good stop loss? I see lots of support getting picked up here over 140, 146. Nice rejection there. Bounce takes it higher. Let's go back a little bit further. Yeah, big rejection there. Swept it there, but ultimately pushed lower. Yeah, everything that I'm seeing says if we're playing to the downside, we definitely don't want the price action back above 140, 146, or it could be a lot more pain to come, in which case it's best to cut the trade if we do get a confirmed break back above that. So this is actually going to set up with a pretty good risk reward based on where that stop loss level is. I'm not seeing a lot else that really rejects and takes us down, heading back in a totally different direction above 140, 146. We did have a confluence here at one point. This also sometimes helps me pick the right levels. That is an interesting resistance. Pretty quickly flipped to support before it made a big push higher, so we could see buyers step in there at 129.80. So that'll be a good second price target. And then what was the ceiling back here, that rejection could wind up being the floor when we test it again. Just trying to get some more price action to see if we could stretch that third price target a little bit further. I'm not seeing anything that makes me believe that we should. When in doubt, I'm going to take the closer, more conservative target and use it. So kind of a little bit of a, we're giving Reddit a wide berth to figure out which direction it's going to go next. Oh, one thing we also need to do, just check, see if we have any clear trends in place. Not seeing, might have to zoom further back. Yeah, I'm not seeing anything that looks like a reasonable downtrend, unless you talked about maybe something that traces like this. But even in that scenario, if that were to become a valid trend, by the time we get over 157.90, we've invalidated that trend, so it's not a concern for our upside trade plan. If anything, it gives us a little bit more confirmation. Ascending trend lines kind of also look tapped out to me. I think if there was one, it was running, well, maybe not. It tried to hold it for a little bit, but then it's just gotten real messy through this recent stretch here. But nothing, again, nothing that I'm seeing that changes, I think, how we should handle those trade plans. So let's roll with this as we've got it. Now, again, we've got more room, more dollar moves to the upside, but the amount of risk we're willing to assume going for these upside targets and trading this plan to the upside is bigger. Closer targets, smaller dollar moves to the downside, but our risk zone is a lot tighter. So let's get this mapped out. Whoops, 57.90 takes us to 164.57, 173.85, and 180.75. Stop loss average down 151.71. Put entry 138.44 takes us down to 133.33, 129.80, and 125.80. with a 141.46 stop loss. No shared stop loss on this one. Let's adjust that Y offset a little bit. Whoops. Don't need to do any Pine scripting right now. There we go. That looks pretty good. So 1.8, 1.69 to the downside, but again, more money to be made, but we're assuming more risk in the process, which is why that risk reward is set up like that. So these are the Reddit trade plans. Let's get these locked in. And get this posted in the Elite X Trades chat so those folks can follow along, or we'll have the plans to refer back to, I should say. Let's get our alerts set up. Let's lock in this indicator template so we don't lose it. And regular trading hours for the alerts. That all looks good. All right, those alerts are in place. Keep your eyes out. We'll know when it's time to start taking these Reddit opportunities more seriously once the good old JT bot gives us the heads up. All right, so let me get back to our chat here. All right, next we had Baba for Chris. Don't need these old Head and Shoulders that never played out right. You can see a pattern start to develop, but Head and Shoulders doesn't really validate until you break that neckline. We didn't break it. In fact, we bounced off of it, and it kept pushing after that. Also, still technically a valid trend line down there, really. So we'll leave that in place for now. Let's get these levels cleaned up a little bit. I'm sure there are some that I'm going to want to add here, like this one. It's pretty close, just below where we've got our flag there on NTS. That's a really clear flip of resistance to support. A level I didn't have in place yet, but I got it now. All right. That's from our old trade plan. Excuse me. Again, these China names can be tricky. Tricky to chart, tricky to trade. It's not a diss on China. That just has to do with the trading hours. This is also an interesting level I don't have yet. As is yeah, there's something. Yeah, there's definitely something right here that we're going to want to keep an eye on. All right, so where are our windows of opportunity? We also, even though we've got this crazy liquidity grab overhead, I think we've got a pretty clear trend line that it's trying to fight through. I am processing. This is actually an interesting level. $121.50. Let's take a look at this. I want to see something here. Seeing resistance, seeing resistance, still seeing resistance. Would love to see some good support reactions off that level. If we have any, they're not too recent. It's a little bit iffy. But it clears out a lot of potential issues getting over that 121.50 level. I think it clears out enough to provide. Maybe this level needs to come down just a hair. Some sweeps above it. Whoops, a little bit further down. Some sweeps above this, but 123.37. Let's see. A little bit of a sweep above there.
Yeah. Trying to brush your teeth?
No, man, I'm not trying to brush my teeth. I brushed them this morning. Chris on the hot mic. There we go. Nah, you're all good, buddy. It's all good. Don't sweat it. I didn't want to mute you again, and then it would take me forever to figure out how to go back to unmuting you like it did the other day. I was like, where the fuck is this mute setting? Like, why can I not figure out how to unmute this guy? From your last hot mic take. All right, so do we ever need to know the reason for any big spike up or down or on a plan? I say let it be, stick to the plans. I mean, even on earnings reports and stuff like that, those big volatile moves, they tend to play the levels well. So I say stick to the levels, you know, try, and it helps keep things simple, right? I mean, I know this all seems a little bit complex, but as much as we can, we want to keep the process of trading as simple as possible. I think we do have a really interesting level right here. Support and resistance. I think that would make for a reasonable stop loss average down. We're shooting for a first price target up there to 123.37. Over that, let's see where the next move takes us. Yeah, we've seen it tested a couple of times. Support flips to resistance, support flips to resistance. So it would be very smart to take some more profits there at 124.44. And then I think we can take a bigger shot up here to this rejection at 126.04. That's what I wanted to change. So that's a good risk reward, good profit opportunities there. I also would not be against, let's see. I know we have this trend down here that's confirmed. There's also potentially, let's see. Potential trend line there, but it would be broken to the downside. We lose 119.42. And we would, if we lose 119.42, would still have this downtrend overhead working in our advantage. So we'd be breaking the uptrend, or at least the near-term uptrend, and still under the existing downtrend there. So kind of looks good across the board. Smaller window of opportunity, should be a little bit better than 1-to-1 by the looks of it. And then I think there's a clear PT2 right here. Third target. Yeah, I'd be looking at, whoops, this level right here. It's not a daily level. It's a smaller time frame, but also has, at least currently, 200 SMA confluence. Could see a little bit of perhaps a liquidity sweep down to tap that below this trend line to actually get to PT3, but room down to PTs 1 and 2 to the downside before we get into any real major support other than the NTS flag here on the hourly. But again, we could see at the very least a little bit of a sweep below that flag that taps PT1 for a profit exit there to the downside. So that's kind of how I'm thinking about this one. So let's lock in our trade plan. Over 121.50, we want to go for 123.37, 124.44, and 126.04 with a stop loss average down at 120.46 to the downside. 119.42 with targets at 118.27, 116.98, and 115.69. Stop loss average down at 120.46. This is a shared stop loss average down. Let's tighten up those labels a little bit. There we go. And let's clean up the chart. All these down here, hide them. So a lot of stuff going on here, but all useful. As long as it's useful, let's leave it on the chart, right? Okay, so here is what is he saying? My bad. My daughter's like, how did he know about brushing teeth? JT knows all. Knows all, sees all. Gotta keep those teeth clean. Dental hygiene's important. All right, auto live stream plan. Let's go. Post this in the elite chat, so we've got an easy place to go back to it. So, whoops. Didn't need all that. All right, there we go. Baba Booey.
Hi, JT.
Hi. Oh, she sounds precious. Oh my gosh, I think my heart just melted. That just brightened my whole day. Shout out from, what's your daughter's name? Well, if you know, you can DM it to me. Some people don't want to put their children's information on the internet, which I totally get. All right, sorry. Let me grab my message link there. Boom, get that locked in. Let's go to our regular trading hours. Let me get back to our chat. Give her my Destiny. What a great name. How old is she?
I'm 7.
7? Listen to, man. So she's in her sassy 7s. She's probably giving you a real hard time, Dad. All right, trade plan pilot, any alert function, 1 hour. Thank you for visiting, Destiny. I really enjoyed getting a chance to talk to you.
Okay. Talk to you soon.
We'll have to get a soundboard of her playing your trades, trade your plans.
Yeah.
Plan your trade and trade your plan.
I love it. Oh, that's the best. Great job, Destiny. You are my new favorite. All right. Chris, bringing the whole family to the stream today. I love it. All right. I already shared this everywhere. I have. Okay. We set up our alerts. Did I lock in the template? I think that's the one thing I haven't done. What is this, our fourth trade plan? Third trade plan? We did Galaxy Reddit. This is the third one. All right, so what are we looking for here on BABA? Just to run through this one last time, we're looking for a break over 121.50. That should give us targets at 123.37. Great risk reward to the upside here, by the way. And then on up to 124.44, 126.04 with a stop loss average down at 120.46. And to the downside, we're looking for a break below 119.42, 118.27 being our first price target, PT2 at 116.98 and PT3 at 115.69, sharing a stop loss average down with that upside trade plan there at 120.46. Let's go. Our last BABA trade plan absolutely crushed. I know our fearless leader Kevin had a bunch of BABA alerts out that crushed. We caught it wonderfully last time. Let's see if we can't repeat that success this go round. All right, we got about 15 minutes left. That's enough time for me to get through this Chipotle trade plan. So let's take a look at it. Let's get our levels on the chart. I don't have any other ones, right? Yeah, no. Okay, cool. So let's pop these on, clean them up. Got plenty to watch and to look at. Big downside move there, but does look like it's trying to bottom off of this 45.26 support. Putting in a little bit of a uptrend. Come on, right there. And potentially in this what looks to be a bearish pennant pattern. It's not confirmed yet, but it's definitely a trend to be mindful of. But obviously looks like a bear pennant, so this one could break down. My question is, what happens below 45.26? Lots of support there. No confirmed breaks. A little bit of a sweep there, but not much else. All right, let's zoom in on this a little bit. There is an interesting level here at 44.54. But the stronger support to me looks like it is down there at 44.11. I would think on a bear pennant breakdown, we would at least get that. As a continuation of the earnings report move to the downside. So what I'm kind of eyeballing here is a break below 45.26 to take us down for a test of 44.11. This weekly level might need a little tiny small 8-cent adjustment. I'll allow it. I think that gives us a good PT2. And then shortly below that, PT3 down to 43 flat. So big initial move, kind of tight price targets after that. But that's just what the chart looks like. Remember, we're not trying to force these levels or risk reward ratios. We want to let the chart do the talking, so we are making honest with ourselves trading decisions and setting up clear trade plans that, again, aren't catering to what we would like to see happen. It's what is likely to happen. Man, I'm coming up with all kinds of slogans today. I'm gonna have to rewatch this one. Small adjustment here. I'm thinking there is a window. Ooh, man, I don't know. This is going to be close. We may have to adjust this plan actually and look for a break over 47.85. Might require a little bit of patience. But patience pays. I'd rather miss some of the move and have better confirmation and a better window of opportunity versus our risk area versus trying to get in too early. What did I just move? Didn't mean to move that. I want to see how this shakes out. God, it is barely there. All right. So then, if that's not as ideal, I think what we're looking at, or we should wait for, because then we really get into this big fair value gap that was created by that earnings report. If we do that, it would also make the case. Actually, I've got that level a little tight there. Yeah, a little bit off, a little low. Probably needs to sit right there, just down a little bit. Not going to dramatically change that risk reward I was looking at, though. So, that being said, I would flip what I was looking at as a potential call entry. I would definitely want that to be support. If we do get a break over 147, or I'm sorry, 147 over 47.85. We do have a really good confluence right here at the moment with NTS here on the hourly. Don't think we're flying all the way up through that fair value gap straight away. That really looks like a PT1 setup to me. And I think, let's go back, maybe that's where we were tapping some of these support tests. Could maybe be the next level up, but again, I said this once already. If I'm kind of debating between two levels that are very close to each other, I want to take profits early and often. I'm going to err on the side of being a little bit more conservative and using the closer price target. But I think that should give us a second target up near 50, 49.92, we'll call it. Just based on where we got this dip, that could definitely act as resistance where we got that buy up and push off of support. And then I think it could take a shot and we really start to take a chunk out of that fair value gap to the upside up to 51.30. That also gets very close to filling what I would consider the fair value gap, kind of completing or being closed up to 51.75. Again, splitting hairs there. I'm going to take the closer of the two targets. So let's set up our trade plan for Chipotle. We get a break to the upside. I promise to buy more burritos. All right, PT1, 48.97, 49.92, and 51.30. Stop loss average down at 47.01. Put entry at 45.26. Continuing down to 44.11, 43.53, 43 even, 46.04. This plan has its own separate stop loss and average down levels. Let's get any lingering chart tweaks cleaned up and squared away like that. Let's bring these labels a little bit closer because we do have some tight price targets. That's probably as good as we're going to get it. All right, so here we have the Chipotle live stream plan. Come on, there we go. Let's get this over in the elite chat. Come on. All right, let's grab our link. Lock in the template. 2, 3, 4. Yep. And let's get our alerts going on the regular trading hours chart. Yep, that all looks good. We'll give it to next Friday to start playing out like we've done with all the rest. Looks good. Okay, cool. So alerts are in. Trade plans locked into our indicator template. So now, just so you guys can see how this works, and very quickly cycle between all of our trade plans just by clicking those different templates. So what are we looking for here on Chipotle? We are looking for a break over 47.85. That should bring price targets at 48.97, 49.92, and 51.30, with a stop loss average down at 47.01. To the downside, we're looking for a break below 45.26. That should bring targets down at 44.11, 43.53, and 43 flat, with a stop loss average down at 46.04. Those are your Chipotle live stream plans. All right, let me get back over to the chat. All right, any last minute questions? We are coming to the end of our Sunday session for July. One quick PSA. If you all have not already done it, please take some time to fill out the monthly surveys. Those are incredibly important to making sure that we continue to deliver quality in the X-Trades Discord community. If you're not sure where that is, it's actually moved. It's like down here in the settings, survey results. There we go. Yeah, Destiny, thank you so much. I know you're not on with us anymore, but wonderful guest appearance from her. Got to meet the whole, or some of the fam, not the whole fam, of the Chris Cheese Squad. So it was very, very awesome and so fun for me personally. So yeah, there's the link for the survey. Please make sure that you are filling those out at the end of each month. Again, it is super important for us to make sure that we continue to make sure that we are giving you all the best in X trades every day. We are always trying to continue to offer that and keep our game at the highest level. So with that being said, I think we have had a really solid session today. I'm going to continue to try to do these the last Sunday of every month, sometime in the afternoon. That way I'm not asking anybody to wake up too early or miss church or anything like that. So keep your eyes out for when I get the next one scheduled. But in the meantime, we will have our pre-market planning sessions every Tuesday and Thursday, 8:30 a.m. to about 9, typically wrap up around 9:10 in the mornings. So I have some time to go get the SPY plan together. So I do want to thank everybody who's taken some time out of the weekend for joining me, especially Destiny. Your dad will have to play this recording back for you off YouTube so you can hear my shout out to you. But thank you so much for joining us, Destiny. Thank you everybody who was in the chat today for joining. I hope you all enjoy the rest of your Sunday, and I will see you all tomorrow morning with the SPY plan and in the chats. In the meantime, until then, take care, have a great day, and as we always say here on Chart Talk Live, man, I wish I had captured that soundbite of Destiny saying it, but we'll go with me saying it. Plan your trades, trade your plans, go out there and get some green, keep those wins big, keep those losses small. Remember, we're looking for profits, not perfection, so stay consistent and you will do fine. The money will come in the long run. All right, take care, everybody. I will talk to you soon. Thanks again.